All right, so folks, thanks a lot for coming on board today. We got a big class here. We've got a lot of folks on today. Just to start, my name is Jeff Clark. I'm a regional director here with GoldenCare. I've been here for, I guess, 25 years. I've been in the regional director capacity for the last 19 and a half, I guess, almost 20 years in August. So my job typically is to compare, contrast, look at long-term care plans, help our agents with, I don't know, marketing things, pre-approach letters, need creation, leads, comparing products. Maybe you have a widowed lady with osteoporosis and a compression fracture, or you have a married couple who's super healthy and have a lot of money, whether it's a home care only or a long-term care plan or a hybrid long-term care plan. My job is to kind of help agents go through these products. But today it's a little different from what I normally do. Today is going to be on more need creation and how to sell long-term care. We do this one once a year, maybe twice a year. This is actually a presentation written by the late Mark Randall. I like to call him my mentor. I traveled with Mark for, boy, a better part of 12 years, going around the country doing agent seminars. And this particular seminar, it's called the Missing Link Consumer Seminar, how to create that need. This has been given for years. It's been tweaked, changed over the years naturally. But at one point, he was responsible for darn near $1 million of long-term care premium written a week. So it's worked in all 50 states. It's worked in all markets. It's worked in all association, group, individual. So you can kind of pick and choose what you want for this. The main thing I want to do today is just kind of go through it, because it'll hit some hot buttons. As when I go through this, I'm not going to do it as a traditional, like I'm pitching it to a customer. I'm going to kind of stop and pause, saying this is what we kind of mean on this slide. This is the point we're trying to drive home here, or this is how this is a hot button, or this is a good area. This is a really good slide. This is some area where you should be really kind of hitting that emotional part of this, or the financial part of this. So take it for a grain of salt. Now, some of you, I've done this in the past. I've had some, 20-year long-term care experts on the phone or on the presentation. They said, "Well, I didn't learn anything too new," and that might be that's fair. We're not. I'm not breaking this thing to like the I don't know, our pivot one where we're depending on their health. We pivot from home care to a hybrid to a long-term. It's not our advanced one, certainly. This is a basic how to sell long-term care. So it's good for all people, but again, it may be for some of you complete experts. I don't know. We've had it for a long time. I've personally used it. I don't know. I mean, long-term care plans I've written somewhere around 700 policies at this point. So I'm not by any means telling I'm an expert, but I have used this over the years and it's done great for me. So without further ado, again, my name is Jeff Clark. I want to thank you for coming on board and joining GoldenCare today. I want to talk about a couple of things before I go into the presentation because I think they're so important. Let me clear my screen here. So in this country right now, we're still in this pandemic, right? Now there's variants coming back, and I hear a lot about this, and I just feel I would be remiss if I didn't spend some time talking to the agents about how important and how much COVID-19 has impacted our industry. It's been crushing the nursing homes, financially with all the extra care they have. A lot of nursing homes are in bad shape. But what are the other impacts on the long-term care industry? And I pause here because I just don't know if most of our agents, some of them do, we have never been more needed as agents to be in this long-term care. A couple of reasons why. If you look at COVID, there's a lot of stats out there. 73% of Canadian deaths for COVID are in retirement homes or long-term care facilities. So yeah, this is really what COVID did, is it impacted facilities. Here's some more stats to kind of tee this up. So of those 3% of the people that received their care at home, 3% of those people contracted the coronavirus. Only 1% of those people died. Conversely, if you were unfortunate to receive your care in a facility, 37% of you receiving a care in a facility contracted coronavirus, and 11% died. So you're basically 12 times more likely to contract the virus and 11 times more likely to die if you end up in a facility for your care. These are just real numbers. These aren't, so scary stats are never a great way to always sell things. This is just for the agent. I don't know if I share all these necessarily with customers, but this is on their mind. They know this, that you're 11 times more likely to die if you go to a facility versus if you stay at home. Matter of fact, it's no surprise that 61% of people surveyed, and this is on a Harris poll, by the way, that was just done in 2020, the end of 2020. Actually, I think it came out in January of 2021. I had the Harris poll if you need that from me, or if you want to get those. It's quite an interesting, a lot of stats there, but 61% of people surveyed said they'd rather die than go into a nursing home. That's telling right there, isn't it? That's the highest number we've ever seen for that. Other ones that came out of this poll, 87% of Americans believe it's more important than ever to get their care at home. 85% believe it's more important than ever to have a plan for long-term care. And yes, 81% of people believe it's more important than ever to have long-term care insurance. It's never been that high, folks. I've been doing long-term care for, I don't know, 20, 23, 24 years, and I've never seen the demand that high. People are calling our office, our leads, our web presence, we're getting more long-term care leads than any time we can remember in our 30 years of exclusively doing long-term care. It's really, your clients are out there because of the social isolation, health and safety concerns that are fueling these fears by clients. I promise you, they don't want to end up alone in a nursing home when they need care. Your clients are waiting for you to mention long-term care to them. They hear about it, they know about it, they're deathly afraid of the facilities. They do not want to end up in a nursing home alone, or any of their loved ones end up in a nursing home alone. I've got, parents, I've got middle-aged 50s and 60s parents calling, asking about their parents more than ever. Can I still get something for mom? Well, it might be too late to get her a long-term care plan, but you know what? Maybe we can get her a home health care only plan. Let's still try to do something to keep mom out of facility. Maybe between, the kids helping out and a couple of home health care plans or short-term care, maybe we can avoid this nursing home thing. So it's just word to the wise. I can't tell you that there's been a better time to broach the subject of long-term care because of COVID. And now we have a second factor that's come in. And I just added the slides literally minutes before I went on with you guys. This Washington State Long-Term Care Trust Act. It's also called the Washington Cares Fund. This is, in my opinion, it's my humble opinion, 25 years, whatever, take it for what it's worth. This is going to be a boom in the long-term care industry. A lot of people are thinking it's bust right now, but here's what's going to happen, in my opinion. So how does this thing work? Well, in Washington now, in a nutshell, they're going to tax you 58 cents for every $100 you're earning. Quick math on that, because my math on that, if I make 100 grand a year, husband and wife, we make 100 grand a year. Well, actually it's each person, but if you make 100 grand a year, they're going to charge you $580 into this trust fund, regardless if you want to or not. You have no choice here. It's coming out of your income. And for that, you'll receive a $36,000 a 1 year benefit at $100 a day. And you're not eligible, of course, for 5 years till 2025. And it's not portable. It doesn't go with you. So, all right. So the only way to avoid this tax is you have to have a long-term care privately in force by November 1st of this year. Okay. Well, there's now, because the great state of Washington finally put out the specs for what you have to have on June 1st. So there is a crush, a literal crush of people in Washington state trying to buy long-term care right now. And frankly, it's too much. That here we're getting I think we're getting close to 75 to 100 leads per day. We can't possibly help all those people. The carriers, the few that are left in long-term care, they can't write all these people. They're 30, 40, 50-year-olds. We can't get it all done. These small little plans, who knows if they cancel a year later, but it's going to work out. So Washington, again, this is my opinion. Washington we're seeing an explosion. And if nothing else, it's putting long-term care in the spotlight. Just with COVID, it's put it even more in the forefront. And so as more states start to do what Washington State is doing, I think maybe Washington will get a lot of these things wrong. They'll make some mistakes. But as more states start to kind of learn from Washington and what they may have there, there's going to be a rush of people to buy private insurance and not be stuck with the state's mandated care. So some agents are worried that it could, replace us. Well, in 5-10 years from now, there probably won't be a need for long-term care because it'll all be mandated. That might be. But that means it's going to be one heck of a run the next 5 years to 10 years as all the states get theirs put together. So these two things, I feel like it's a perfect storm for long-term care. We've just never gotten so many lead requests. We've never gotten many quote requests. We are being inundated with requests for long-term care. The carriers are getting all the business they can to try to handle the Washington thing and other things. So, if you've ever been apprehensive to kind of talk about that topic or bring long-term care up, Now is the time. All right, a lot of warm up there, but okay, let's go on the missing link. So how do you create that need? And again, I told you this presentation, it's been given a lot, and so I'm going to go through this as if I'm talking to a client, but I'm going to pause because I know I'm talking to agents. So long-term care is truly that missing link in your financial plan. What is an agent's role? Well, the agent's role is to understand the industry, okay, and obviously GoldenCare can help you with that. We've got all the products, anything you want to know about the industry in general. I don't care if you're doing association group or individual, or if you're talking to married couples or whatever you possibly need or some understanding of the long-term care industry. GoldenCare's got that for you. We have all the research on insurance companies and policies. We do have all the multiple carriers and different styles. I mentioned home care only, short-term care, long-term care hybrids, traditional, pure long-term care, all the way down to true freedom, which will, take people if they can fog a mirror. So no matter what you've got as an agent, you've got an array of products and knowledge in that industry. It's important this I'm explaining to my client, of course, this is the agent's role. And you have this, you have GoldenCare in your corner. So you have this understanding, you have the research, and you represent multiple carriers. Okay, so that's your job as an agent. Steps in the process. And I used to say this a lot to my clients. I can only tell you about long-term care, and I can only take an application for you. I can't necessarily sell you long-term care. This is going to be up to the insurance company to accept you, to make an offer to you. I can solicit that sale. I can help facilitate that sale. I can help apply. But all I'm doing is I'm helping you get an application in. It's up to the company. So I always told people, look, you're kind of buying this insurance with your health, not your checkbook. Popular saying we have around here, but it's very true, more so than ever. There are fewer carriers in the industry, and they're a little tighter on underwriting than they were 10 years ago. So we're seeing a lot of declines. And so I want to make sure I explain to them that qualifying is the biggest thing. And I do a takeaway. I'm like, if you can qualify, I must say that at least 4 or 5 times as I'm talking to someone about long-term care. I'll hit them with the, if you qualify, you can do this. Well, if you can qualify, the policy will pay this much. If you can qualify, at some point they'll beg me, what do you mean if I can qualify? Well, then I tell them about the health. I tell them how hard it is to get. And that's just further creating that need. Okay, it's hard to get. And if you do get declined with a traditional, we've got other plans that will pick you. I'm making sure that they know that no matter what we apply for, we're going to find them some type of coverage. Okay, so we're going to educate them about long-term care, what it does, how it works. We're going to design an affordable plan, and all we can do is start the process for you. All right, so can you qualify? And this is where, again, you're always wise to start asking some health questions early on. Because if they tell you they got, a touch of dementia or a touch of emphysema, that's a decline. You might find out that they're on Coumadin, they're on a blood thinner. Why is that? You've had 3 strokes in the last year and a half, okay? A TIA and a stroke. All right, so you're gonna kind of want to ask some stuff early on, because then we know we're not pitching a full-blown long-term care plan at the end. We're probably gonna have to pivot to a home care only and maybe a true freedom. So yeah, you want to qualify, ask them some health coverage. Do you need coverage? Suitability. Now, with suitability, yeah, the state requires you as an agent to determine whether that client is suitable financially to have long-term care. In other words, they don't want someone buying long-term care that is, I don't know, they're impoverished. They've got maybe, 10,000 in the bank and they have a social security income of $600 a month. They're basically qualified for Medicaid. They don't need to be buying long-term care, right? Because the state's going to pay for them anyways. Now, I disagree sometimes in some of the levels that the states say. I've seen things even like Kiplinger Financial, Consumer Reports. They say, well, if you only have, a couple 100,000, well, then you really shouldn't. You should have at least $1 million to protect. Or I think that is such nonsense. The average American, can't survive long in a nursing home. It's something like 2 or 3 years, and doesn't speak to have a lot of savings. I don't have the exact stat on that, but a couple 100,000, $250,000. This is pretty popular, or pretty common among a lot of Americans these days. So to say that you don't need it if you only have like $250,000 laying around, to me, if nursing homes cost $80,000 a year, $100,000 a year, and as a married couple, I have an 80% likelihood of beating it, and my wife and I only have maybe $250,000 and are saved up, then I think long-term care is the scariest thing facing me, because it's 80% likely to happen, and it's going to be on average, 160, 180,000 for one of us. I think I'm more at risk only of $250,000. So the publications like to say, well, if you have less than that, don't worry about it. I think that's completely false. I don't want to rely on the state for anything. So those people that only have $250,000, $500,000, I think they're the biggest target for long-term care and need it. But the state doesn't want you to go through their income, assets, et cetera, to make sure they're not on Medicaid and not, able to buy it. So, all right. I explained to them that health insurance doesn't pay. A lot of people had this misconception that their current insurance and or Medicare is going to pay for the long-term care needs. In their minds, if they have a stroke, if they develop, I don't know, cancer and they're going to be in care for 13 months, or they kind of think that this care is going to happen from Medicare or their traditional insurance. Traditional insurance, Medicare, they're all designed to help you in the short term. You had that stroke, they'll get you through it. And they don't get, it's very hard to stay in hospitals this day. They want to get you out of the hospital as quick as they can. They get you billed to this nursing facility. So essentially, hospitals are trying to shuffle you out of facilities, out of hospitals, and they put that back. I took care of my father recently. An example of this, he had broken his back, he had fallen again. He was in pretty rough shape. But so when he broke this back, he was in the nursing home for, I don't know, hospital for 3 days, then in the nursing home for like 2 weeks. They basically said, you got to take him home. He's no longer, getting better, et cetera. And so, I mean, he was not ready to be home. I was there 7 days a week. And so the point I'm making here is this: people had this illusion that somehow their health insurance and Medicare and their Medicare supplement or what have you are going to pay it. It just doesn't. And this 100 skilled days they say in the Medicare books, that's determined on whether or not they're improving or not. They don't get 100 days unless they're continually improving. And no one improves from a hip replacement or something, every day for 100 days. It's 2 weeks, 3 weeks, 4 weeks, and they're getting you out of there. So the point is that try to educate them that Medicare doesn't pay this. Your current health insurance, if you're 57, same thing. It's designed to help you the first 10 days. They're going to send you home. You're not going to be covered for long, ongoing care. Okay. All right. So why is there an issue? Well, this is just the aging of America. There's a lot of stats out here in this. There's 10,000 Americans turning 65 every day. First baby boomer hit in 2011. But between 2007 and 2030, there's a 90% increase in the plus 65 population. Here's the biggest thing. And I'm gonna pause here. I meant to do need creation. I'm going to steal this from my mentor, Mark Randall, who I watched give this presentation. It's kind of nice to watch the author give the actual presentation. But he started out, and I apologize, I'm going to back up here, but on this stat, kind of remind me of this. Before I gave the presentation for long-term care, I would share this little anecdote, this little story. There is such a tidal wave of care coming, these baby boomers. The fact of the matter is, we're just running out of able-bodied caregivers to take care of them. When Medicare was written, there was 11 working people paying into that system for every one recipient. Now, again, 1962, 61, when Medicare came to be, well, now there's 2 to 2.5 people working, paying into that system for every one recipient. And the recipients are using 3 times the dollars that they used to use. So said another way, the landscape of our long-term care in this country, if we were to suddenly stop right now building schools, roads, hospitals, apartment complexes, and houses, if we were to take every nail, cement, brick, mortar, every carpenter, every construction worker, every roofer, and all we did with every bit of resource in this country and every manpower and every nail we had is all we built was nursing homes. That's it, nothing else. We would never be able to build enough nursing homes in time to take care of the tidal wave of people that are coming that need care. Can't do it. So what's happening? You're seeing things like the Marriott Courtyard. You're seeing things like, I don't know, Staybridge Suites. Hotel chains aren't building sky rises anymore. They're building 2 to 3 level, spread out, and they have kitchens, they've got bathrooms, they've got living rooms. They're all being converted into long-term care facilities. It's happening already. Cruise ships, true story. These big cruise lines, the ship already has a hospital on it. It's got laundry service. It's got a chef, a cooking service. They're floating assisted living facilities. And it's the way that the companies are writing out the buildings after 30 years, et cetera. So this is what I'm trying to paint the picture of. We are simply running out of places to put people. We're running out of dollars. And so to think that you're going to let overburden government take care of you, not a great thought. Okay, so legislative stuff. What's the government doing? In 2002, the federal government offered long-term care to 22 million employees. It's a Fed plan. It was a decent little plan. It was very bare bones. You know, it was just basically a heater and keys, but it got more than anything, it educated people of what long-term care was. Tax incentives. Most states and the federal government will give you a tax deduction for buying long-term care. You know, again, some states have a credit, some states do a itemized deduction. The Fed plan, you know, there's incentives there as a married couple. Each year these change, but roughly, you know, if you're 65 years old, you can write off $4,000 or $5,000 of the premium. So, you know, there's tax deductions, there's tax advantages to it. Own Your Future campaign was something that a lot of states mailed out a letter sometime between 10, 15 years back saying, we're broke, we can't afford to pay for you, get your own long-term care. Washington State, of course, has gone a step further saying, okay, that didn't really work, now we're gonna make you buy it. So, Deficit Reduction Act. All right, this is kind of a big one. Deficit Reduction Act is sweeping legislation out there that stopped all the loopholes that people did to try to hide their assets and qualify for welfare or Medicaid so they don't have to pay for it. In other words, what we had through the 80s, 90s, you had farmers that had $1 million worth of land, okay? They would transfer the farm into their kid's name, and then they would go qualify for Medicaid. So basically you had millionaires ripping off Medicaid all over the place, hiding assets. There were things called Medicaid annuities, Medicaid life policy. There were lawyers that would do seminars on how to hide money from, you know, the government and qualify for Well, the Deficit Reduction Act more or less said, no, this is illegal, it's not right. And these 3-year look back periods, 5-year look back, they went to retroactive. In other words, I've seen some of these people, they've looked at me across the, yeah, my lawyer told me to transfer, so I did it longer than 5 years ago, I'm free and clear. And they're so proud of themselves. You know, first of all, I've always thought that Medicaid was designed to help the truly needy and impoverished, but you got this guy that's worth $4 million looking at you kind of like he's, I don't know, he's out-tricked the system by transferring his assets. And here's the problem he's not realizing. You know, when you transfer your assets to your kid's name, you know, your son can get divorced from that daughter-in-law, and pretty soon you lose those assets. Your grandkids are not eligible for grants. You know, you don't get the huge tax deductions that you would get on a long-term care policy. Your son's in a higher tax bracket. He's going to pay a ton more taxes because he's now got all your stuff in his name. So in other words, you costed your family a ton of money and put them in a lot of risky place just to avoid buying a long-term care plan. So, you know, the Deficit Reduction Act says, I don't care if you transfer this stuff 10 years ago. States are broke. It's not like they're mean. It's that they cannot afford, their budgets are broke. So they used to take a blind eye to people transferring money away. They'd still get them qualified for Medicaid. We had plenty of money, no one cared. Well, now it's drying up. And so you're still gonna have people, you know, lawyers will say, we can still find a way to hide it. Well, I'm not sure why you wanna purposely qualify yourself for such an overburdened healthcare. Do you wanna end up in a Medicaid nursing home 20 years from now? I tell these people that are pretty well off, you don't. The best thing to do is to buy long-term care. Take your deductions, your family comes out ahead, and you have options. Okay. Boy, I just covered the whole slide. That's basically Deficit Reduction Act. Okay. So who needs long-term care? Another misconception is that people that only are under age or over age 65 need it. So 56% of people who need long-term care are actually over 65. There's all kinds of people who have strokes at 58. 54, get cancer at 62, have a motorcycle accident, automobile accident, some type of health accident that lands them in a nursing home. So, you know, this isn't just for old people. So when the best age to buy long-term care is somewhere in your early 50s, mid 50s, when it's still affordable, and you can still qualify for it health-wise. You start getting your 60s, it gets real difficult to get, and it gets really expensive. So it's not just old people who need it. Okay, where is care provided? Another good stat here. 84% of care is received at home. That's for people getting cared for. So if you look at the rest of the place here, there's 8.4 million people in the community receiving care, 1.6 million people in nursing homes. The community, that's 46.2%. That's all your home care stuff, friends, family. That's who's really relying on the care at this point. A lot of the care that's happening is happening by friends and family. Until, of course, they run out of money, they end up in a nursing home. So just to give you an idea of where the care is provided. So the 37% here, by the way, that's, or the nursing home here, that's 13%. These are the people that are basically paying out, you know, it's the facts here. They're gonna be paying out anywhere from 50 to 100,000 a year. They're wishing they have long-term care. Okay, So why do people need long-term care? And again, this is a little Mark Randall to it. It's a little deeper than, for the most, but it's good that your clients know that you know what we're talking about here. They're diagnostic related groups. Okay, hospitals in this day and age are constantly trying to get people out of the hospital. These diagnostic related groups, hospitals get reimbursed from Medicare on days for a particular ailment. So a cardiac heart attack, the hospital gets reimbursed from Medicare for 3 days. If it's a hip fracture, the hospital gets reimbursed for 6 days. If some patient walks in the door with a hip fracture and she's there for 8 days, the hospital loses money. Let's just say the Medicare sends the hospital $1,000 a day for care. Well, okay, if they're there for 8 days, they only get 6,000. If they're there for 4 days, they still get 6,000. So hospitals are constantly trying to get you out of the hospital as quick as they can, get you into the facility or the recovery care areas, because they're not getting reimbursed as well from Medicare. And this is just going to get worse. You're not going to see lengthy hospital. They're shipping you home right away, or it's on the care becomes on you to pay for. Medicare can't keep paying for everyone. Those numbers keep going down and down. Okay, chronic needs. So, all right, so hospital acute needs, yeah, obviously cardiac arrest, strokes, etc. Second, chronic needs. Now, these are things just with pure old age. Naturally, Alzheimer's, strokes, cancer are going to land in there, but sometimes it's just dementia. Sometimes it's just chronic arthritis, osteoporosis, diabetes that just been going on for a year, kidney problems, then of course the strokes. What I usually do on this slide is I'll ask clients, do you know anyone that's had a heart attack, cancer, stroke, developed Alzheimer's? If you do, tell me about their story. Where did they receive their care? I was always big at kind of letting them, interject. So when I get to this area, I always said, could you see this happening to you? Do you know someone who's had a stroke or had Alzheimer's? And they're going to say yes. Oh, yes, my aunt, she was spending 30. How did you pay for that? How did that go for your family? Oh, they were lucky. They had a daughter that was able to leave work and take care of her. I'm like, how about you? No, my daughter can't leave work. I kind of ask this stuff on these slides. I just have you had this happen in your family? Do you know someone who's needed care? In these areas right here are pretty much, you talk to anyone, everyone knows someone's had this kind of situation right here. Okay, here are the odds. Odds are, pretty much in every knee creation, but I'll bore you with them. 70% of people over age 65 will require some long-term care. Women are especially at risk. If you reach the age of 65 as a woman, you're 80% likelihood to need care. Married couples, this is right. When I sat across from married couples, I was pretty frank. Look, this isn't a question of if you need care. Married couples have a 90% chance of needing care. Don't stick your head in the mud. The husband will say, she'll take care of me, or well, the kids will take care of me. It's going to happen. It's going to be expensive. How are you planning on paying for it? So this whole, will it happen? Yeah, we don't talk about if this happens or if that. It's going to happen. What's your plan to pay for it? All right, costs. Plain and simply, it's expensive. If you're looking at a nursing home right now, it's $290 a day, $100,000 annually for a private bed, or $93,000 national average. Now, if you're in Shreveport, Louisiana, it might be as low as, I don't know, $60,000 a year, $50,000 a year down there. If you're in Alaska, it might be $300 a day, $500 a day. The Eastern Seaboard, anywhere in New York or New Hampshire, anywhere in the Northeast, Connecticut, care is well above 100,000, 140,000 a year for private, 120,000 for semi-private. So, assisted living, national average 51,000. On costs, I never mind if I'm sharing a screen with a customer, or if I'm with a customer or a client, I don't mind going to either Genworth's cost of care or Mutual Omaha's cost of care. It shows you in any county or any area of, any of the country, whether I want to look at, Nebraska, or I want to look at Connecticut, it's going to tell me what the average cost for assisted livings are, what the average cost for nursing homes are, what the average cost for home healthcare aid is. So I like to show this in real time to people, whatever area I'm selling, and I sell in multiple states. So if I get someone and I'm joining computer screens, I usually have the cost of care, things right there in their area, so I tie it to them. But just know it's expensive, and who really pays for it? So right now in this country, Medicaid, unfortunately, is paying almost half the bill. You'll run to veterans, by the way, and they say, I get veterans benefits. There's veteran nursing homes. They're full. And here's the thing, I never, ever, ever want to argue with a veteran about whether or not he's gonna get care or not. He's usually misguided. One of his buddies is in the nursing home, the veterans nursing home, and is taking care of him. Well, they have, again, I can get you, it's called the Aid Association for Veterans, the guide for this. But you gotta have, first, it's prioritized. There's limited bed space. So you have to have X amount of low income. You have to be lower income. And then if you have a service related disability, whether it's 30%, 40%, you lost a leg in the war or something, there's priority and pecking order. It's pretty tough to get into a veteran nursing home at this point. But people think they do have that coverage. Sometimes it's a matter of just merely suggesting it's nice to have options. Medicaid right now, again, there's 43% or almost half it. Medicare, so 24% of care is being covered by Medicare. That's that short-term care stuff. I can tell you that 90% of long-term care claims don't really exceed 2 years. A lot of this stuff is 6 months to a year and a half. So yeah, Medicare is going to cover that first acute care immediately following that stroke or cancer or that maybe broken hip. Okay. So, but look here in the red area, the 19%, that's out of pocket. Those people are paying that, whatever it is, 100,000 a year out of their own pocket. And 100,000 a year doesn't take long to wipe you out. And that's a devastating effect that long-term care can have. And there's no they think their private insurance covers them. They think Medicare does. It doesn't. Okay. So there's really 3 ways to pay for long-term care. Be very, very rich, be very, very poor, or be insured. That's it. Okay. So kind of wrapping up here. This is a great slide. I love this slide. This is the walls around your state. So, and I think it's going to come down okay. So everyone has their house, auto, savings, investment, and income insured, right? We think about the house, we think about the car payment, we think about insuring life insurance, our house, our car. Okay, but what are the odds here? Just think of this. I think in reverse. If I'm at a horse track and I had to bet on something, I'm going to bet on the most likely thing to win versus the long shot, right? If I'm insuring myself, right? I would insure the most likely thing to happen first, and then I would do the longer shots I would insure later. So if we look at it, fire or tornado, you got homeowners insurance for that. Car and accident, auto insurance, we've all got that covered. All right, health insurance, who doesn't have health insurance in case you have a heart attack or major medical insurance, right? Something that's going to cover you in an event of a 10,000 or bigger, heart health condition. Long-term care, not too many people have it. And let's look at the odds. So your chances of having a fire or tornado are 1 in 1,200. Your chance of getting a car accident that's going to cost you 10 grand or more, 1 in 240. Chance of having a heart attack, 1 in 15. Okay. Chance of you needing long-term care, 3 in 4. It's the most likely thing to happen to you. And it takes your car, your house, and your income. It takes them all. So, said another way, this is what will happen to married couples. This is the #1 threat facing them. Nothing else is even close. And it's the most uninsured thing out there. If you can afford premiums, you can afford long-term care, you can qualify for health-wise, there's no reason why you shouldn't have this. There's no better way to pay for it. We can argue the merits of a hybrid versus traditional, home care only, all that product stuff. But you shift this risk to the insurance company. Okay. Now I know in houses, if you have a mortgage, you have to have home insurance built in there. I get that. I'm just saying odds. This is a great slide that kind of paints that home. Most likely thing to happen, and only 8% of Americans have it. Okay. So why do people buy it? And this again, very important here. People try to harp on, you got to save your assets, got to save your assets, got to save your assets. And it's such a big topic for them. In reality, it's so true now. Most kids are doing better than their parents. It seems like getting my money to my kids is not my biggest really concern. Actually, the biggest thing I worry about is they are doing so well. I don't want to burden them. They can't afford to. My daughter makes $130,000 a year. At this hospital. The last thing I can do is make her quit her job to take care of me. It's devastating. For just for me to save 100 grand a year, it's going to cost her 100 grand a year. And so, families, and so I see agents fail because they go to these people, they say, you're going to lose all your money. You're going to lose it. I'm like, yeah, it's all right. I got a couple $100,000 in the bank. My kids are fine. If I end up on Medicaid, whatever. That's not what drives people to buy long-term care. What drives them to buy it is, I don't want to end up in that scary nursing home in social isolation with no one seeing me, contracting whatever pandemic might be down the road, whatever diseases. I don't want to go to a facility. I would like to choose where and how I get my care. That's why people buy. When I sell long-term care, I am harping on the fact that choosing your independence, you're calling the shots. You want to have a Medicaid where they're going to ship you to whatever Medicaid, it might be 30, 40 miles from where you live, might be 60 miles from where you live because that's the only place they have a bed. You go to a hospital for stroke when you're already in that facility for 3 years. That bed got used, they ship you somewhere else for, you don't know that the care ratio already in Medicaid and is terrible. It's 11-1, 12. It's only going to get worse. We're running out of able-bodied caregivers. We have a tidal wave of care coming. I just paint the picture of, look, you want to be able to pick how, when, and where you're cared for. That's why you're buying long-term care. Yes, it's nice to see your assets go to your kids. That's a positive of it too. That way, you don't have to burn through your $500,000. You can give it to your kids instead. Yeah, but choosing where you're going, and I don't want to have my kids. Again, I don't want to. So actually, no, I will say this. I do make it personal. When I'm selling, I'm not afraid to tell my experience. I took care of my dad the last 3.5 years of his life. What did I have to give up? I missed a lot of work. For a while there, I was going to his house every day. I had to drop my coaching job. I coached 2 of my boys in football for years, baseball, and for my third one, I couldn't be a coach anymore. I had to give that up. I had to give other things up, business trips I couldn't go on. I gave up a lot. I didn't see my family much. Every day I went after work and was with him for 2-3 hours when he'd get out of the facility, or he'd, break his back again, or have another episode, or fall, or, it was very hands-on. And I don't know, for a good portion of, 3 years of my boy's life, they just didn't see me after work for long periods of time. I don't know, weeks at a time. So there's a cost there. I promise you, if you talk about having choice and independence, not burdening your children, that's how you sell long-term care. The asset protection is just a bonus. Okay. So then I look at them after going through all this, and I tell the client, what would be your reason? Do you want quality? Would you not want to burden your children? I let them tell at this point, and after I tell my story like that, they're going to come back. Well, yeah, I don't want to burden my kids. Nope. I don't want my kids showering me or bathing me. No way. So that you're going to find out in this slide what their hot button is. Would you does being able to pick where you're cared for mean anything to you? Of course it does. Yeah, I don't want to go. They'll tell you, right? Is protecting assets important to you? Do you want to see your legacy go to your heirs? Is wiping out your spouse? Does that? Well, it seems like dirty pool, but sometimes the husband would look. The wife's 10 years younger. She'll take care of me. And I kind of, well, who's taking care of her? It's maybe dirty pool, whatever. It's just reality. But we are kind of in this country. Women live longer than us. Women are more likely to need long-term care. That's because they usually end up alone. They do live longer. They're more likely to need care because they don't tip over from heart attacks and strokes. So yeah, it's do you want to impoverish your spouse, wipe her out, and then she has no care? So there's just these are the hot buttons. This is why people buy it. Okay. So the biggest thing is, remember, we're going to try to keep you out of the nursing home, right? We don't want you to end up in there. All right. So it's your choice. And this is where you're going to design, and that's you can call us anytime. We'll help you design plans. I usually like to have a couple plans laid out beforehand. And from here, I used to call it the Volkswagen, or I wonder if we have that slide still. No, we don't. So from here, I would, it's your choice. I would have a Volkswagen and a Cadillac here. I can design a plan that's as little as $100 a month. I can design a plan that's $300 a month. I can do one that's going to pay tons of bills, 3 years, 4 years, or I can give you a bare bones that'll get you, 90% of care happens the first 2 years. I can get that covered for you for about $100 a month. If you want to worry about, being in a facility for years and years, going to a nice assisted living, maybe having a lot of good options, we can design more of a. So the biggest thing is I want to have a plan that's going to be able to pay family and friends. So it pays cash. 85% of claims start at home. So you want a plan that can pay your family and friends with no restrictions, cover additional cost expenses. If your kids do have to leave work, we can compensate them, pay their bills, no worry about submitting bills. A cash benefit allows you to do anything. And the good long-term care plans, traditional Mutual of Omaha, is going to have that cash benefit in there. That's paramount. That means I can pay my kid. I can pay anyone I need to. All right. So 80% of people needing care receive that care from unpaid caregivers. That's why that cash benefit is so important. That does exist in Mutual. All right. So then also there's a progression. So your family tries to help out. You try to stay at home. We're going to design the very best home health care plan we can in this thing. Eventually, at some point, we'll bring in therapists. We'll bring in home health aides that will help you with laundry, bathing, dressing. anything we can do to help keep you there. Therapeutic devices, medical alert systems, home modifications. We'll widen door frames. We'll put cement slabs coming to your house. We'll put handrails around your toilets. Okay, these are all part of long-term care benefits. And at some point, though, we may have to go to that facility. Okay, so we have coverage for that as well. So we can pay your family, we can pay you to be at home. If ultimately the Alzheimer's gets too bad, you have to end the facility, you got coverage for that too. Whether it's a congregate care home, an Alzheimer's care home, assisted living. Okay, so we're going to give you all 3 areas of care. It's all covered. Okay, so we're going to design a plan that's personalized to what they want. Whether the home care is important to them, whether not burdening the family is important to them, having more cash so they can pay their daughter. We're going to design that for them, and like I said before, then we're going to get them started. All right, so all I can do is take an application and submit this. I can't guarantee you're going to get this coverage. We can just start the process. Now, folks, I don't take 40 minutes normally to go through that like I did today. I usually go through that in about 25 minutes. I kind of stop in some stories there, etc. So this was really just meant to be helpful for you. Hopefully you picked up some stuff from that. That number on here. Yep. I'm going to keep that on here for a second. 800-842-7799. Folks, if you're newer to long-term care, if you think you have a couple cases to quote, maybe you got a couple that's approached you, after having heard this, after knowing how much people are thinking about COVID, thinking about, the pandemic, thinking about Washington State, if you're anyone who's anywhere in the Northwest, California to Montana, it's spreading this word. Ask your clients. I've never felt like there's a better time to be doing long-term care than right now. It is a hot topic. It is something that's on people's minds, and they're waiting for you to ask them about it. So don't be afraid to lean on GoldenCare, lean on me. Call me. You got a married couple you're working on, you got a widowed lady with osteoporosis. We'll find you the right product. So before you do that presentation, you'll have a brochure, you'll have an app, you'll have a couple of proposals. We'll make you look really good. So lean on us. We'll help you right. We've got tools to help you with any step of the way here, comparison of other products. So let us know how we can help. GoldenCareAgent.com is our agent site. All kinds of tools and pre-recorded trainings, product trainings, presentations, quoting softwares. Otherwise, call us, 800-842-7799. So I want to say good luck selling. Have a great summer. And if you guys need us, please call us. But thanks a lot for coming on board today.
Check out our website, GoldenCareAgent.com, or give us a call at 800-842-7799.